is that 50% of small businesses go out of business within the first 5 years. So on Static Brain, for example, they say that startup businesses fail. The failure rate by industry in the U.S. After 5 years was 50% closed, and after 10 years, 70% failed. Hi, I am Brandy Whitmire. I am a direct lender, banker, and broker here in Dallas. I do loans nationwide, all kinds of loans. So if you ever have any questions on something out of the state, a lot of people think I'm in Dallas only, or that we only do things locally, but we are nationwide and can help you anywhere in the country and any of your friends, family, coworkers, things like that as well. And always looking into getting into businesses and with your HR as well to offer incentive and do plans with them as well. So today I'm going to talk about entrepreneurship and home loans and how they go together. Right now there is such a surge and a boom of entrepreneurs and people going out starting their own businesses, or even people just doing contract work with 1099s. So that being said, there are much different guidelines that are put into play whenever you are self-employed, or you are basically not a W-2 employee, anything other than a W-2 employee. So that's 1099 contract, let's say it's capital gains, whatever it is, like investment income, royalty income, things of that nature. So first I want to talk about why it's such a problem. Why are there so many stricter guidelines on self-employed people? And the reason is that 50% of small businesses go out of business within the first 5 years. So on Static Brain, for example, they say that startup businesses fail. The failure rate by industry in the U.S. after 5 years was 50% closed, and after 10 years, 70% failed. So think about that on a lender perspective or a government entity perspective. Let's say Fannie, Freddie, FHA of these guidelines. If the statistics show that your small businesses fail within the first 5 years, and some of these, even like here Bloomberg, 8 out of 10 entrepreneurs who start a business fail within the first 18 months. So that's 80% of businesses fail within the first year and a half, according to Bloomberg. That's a big deal. So if you were lending your money and you knew, and by the way, 99.7% of all businesses in the United States are small businesses. So think about that. That means 0.3% are going to be large corporations. Now, a small business is considered a business with 100 or less employees. So that's still pretty big. 100 employees is a lot. I mean, 18 is a lot. It's a lot to manage. But so if you consider that, where 0.3% of businesses in the U.S. are larger corporations, think about how many small businesses there are. So if you're a lender and you're going to finance you $100,000, $200,000, $300,000, $400,000, $500,000, and that was your money, wouldn't you want to have some strict guidelines on it, knowing that there's a 50% chance that you're going to fail or that you're going to close your doors, and where's that income going to come from, right? Same thing with contract work, 1099, or anyone that's not W-2, because this is not steady income. So that is why the government puts such a larger amount of guidelines on these types of loans. So that being said, I'll give you an example. Me, myself, and I, but myself, I've been doing this for 18 years. April 22nd was my 18-year anniversary in the real estate industry. So for the first 9 years, okay, so it's until 2009, I was a 1099 employee. Just like most every real estate agent you see out there right now and I started out as a real estate agent. I was a real estate agent for 13 of those years. So every real estate agent pretty much is 1099, okay? When you're 1099, that's basically self-employed, okay, or contract work. So me being a loan officer and a real estate agent in 2007, 2008, 2009, when the crash happened, I moved to LA. I couldn't even refinance my own rental property back here in Texas. That was at 8%, by the way, for those of you that think that rates are high right now at the 4, 5, 6 range. I had 8%. I refinanced from 11% to 8%. Anyway, I myself, even being in this industry, was not able to refinance my own property, and I was stuck in a loan that was 8% and flailing out of it because of what had happened to the economy, because I was a 1099 employee. And as a 1099 employee, if I made, let's just say, $100,000 for easy numbers, I was trying to write off $100,000, right? Because of the expenses. And back then I could very easily write off $100,000 because you have mileage, you have the charities that you give away, you have expenses, and showing property and all that, and car and blah, 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 whatever. You're trying to write off as much as possible, because if, let's say, I made $100,000 cash, and I then I could find $80,000 of expenses, then I'm telling the IRS at that point, and by the way, I'm not a CPA, I'm not giving any advice on CPA or on financial CPA, anything like that, okay, on tax returns, anything like that. But if I said that I only made $20,000 because everything else was an expense, then I'm only paying taxes on that 20%, on that $20,000. So whatever my percentage is, my tax rate percentage is on that 20,000 would be what I would pay. So I might have to pay in $1,000 or whatever the case may be. So when we get tax returns in for self-employed borrowers, especially within the first couple of years, when it's hard to make money anyway, you're writing off those expenses, and the IRS says, okay, well, you're telling us that you only made $20,000, so that's all the income that we can use as a lender. Okay, so there are some caveats to that, right? So you can add things back in. For example, you can add back in mileage, depreciation. Keep in mind that meals and entertainment, that does count against the income. Rental loss affects your income because it's deducted. So there are some ways and some things that what we can add back in to that final number, but it's going to be few and far between. So when you are going into being an entrepreneur, if you are already a small business owner right now, then keep in mind that whenever you're doing your taxes, that the income that you are claiming that you're actually paying taxes on is what we can use. So also remember, as a small business, you can W-2 yourself. So the W-2 income is W-2 income that we can use W-2 income even if it is your business, because you're guaranteeing that money. So now, let's say you've owned your business for 5 years, and you the first few years, of course, it took a while to get your business up and running, to make money, to be able to show the income. And let's say it's year 5. Okay, you've owned your business for year 5. In year 5, now you're showing some income. There's some depreciation in there. Sure, we can add that back in. But we are able to use only 1 year of tax returns as long as you've owned that business for 5 years. So that's kind of new, which is awesome, because it takes about 5 years typically for a business to just start really flourishing and making money. And the IRS knows that, and there are guides and there's statistics to back that. So if you've owned your business for 5 years, we are able to use the last year tax return, okay? Otherwise, it's going to be a 2-year average. So, for example, 2016, 2017, we're going to add those together and average them, as long as there's not a huge 25% loss or whatever the case. But you don't want to, as long as there's not a huge loss in in this preceding year, right? Now, let's say that you haven't done your 2017 taxes yet, okay? And you filed an extension. Then we are going to have to use a profit and loss statement. Now, whatever is on that profit and loss statement, we're using as income, okay? So keep in mind that, let's see, let me just make sure I'm saying this right. Yeah. So yes, if you file an extension for the current year of taxes, the income is based off the previous 2 years. So keep that in mind. So we would then use 2015 and 2016. Then we also need the entire profit and loss statement for 2017 and 2018. So you put yourself in kind of a bit of a dilemma there, but it can be done. Now, the difference between a W-2 1099 LLC, there are different ways to calculate income there as well. And I'm getting kind of flustered on this because there are so many new guidelines and there are so many ways that we can calculate income. For example, we have a 12-month bank statement program where no matter if you're self-employed or not, if you bring us 12 months bank statements, we have financing with a 660 score for 10% down that we can use actual bank statement, like the deposits that you're putting into your bank. There is also opportunity to do asset lending. So if you have a bunch of assets, we can use a percentage of that and use that as income. So I get kind of flustered on this situation on this because there are always ways to, like, if you have money, money talks anyway, right? So you put money down, you are showing the income in your bank statements or in your reserve accounts, then we're going to be able to probably figure some kind of program for you to at least borrow some of that money, okay? But going back to the P&L, whenever you are starting your business, make sure that you are listing a phone number, that you have a directory, okay? And secondly, you're keeping really good books. That profit and loss statement is something that we're going to need and that we are going to use. We're going to be using that income. So if you have declining income on your profit and loss statement, which is not yet filed with the IRS, that's the income that we are going to use, right? And with the average of the, on top of the average of the 2 previous years. So entrepreneurship is awesome. I love it. I own 2 businesses outside of my mortgage business. And it's tough. I mean, and I commend all the entrepreneurs out there and small business owners that are putting themselves out there and helping, especially since our economy is turning more towards a peer-to-peer type based businesses, as far as like Uber, Airbnb, things like that. It becomes more affordable for us as consumers, and it's able, we are able to take a little bit more charge of our lives and things like that. So if you have any questions on entrepreneurship or entrepreneurship as well, I definitely have recommendations on books and groups that you can join. And if you are an entrepreneur or if you are self-employed and have a small business, reach out. If you have any questions at all about how, certain financing works, things are different between Freddie, Fannie, FHA, USDA, VA. So all those guidelines are different, and there are private lenders as well. So keep all of that in mind. If you have any questions at all on any type of financing, please reach out, of course. And you can DM me. I got a lot of response last week on my little rant that I went on. And I want you to know that I really do appreciate all the messages that I get on privately and the text messaging and the calls, and it really keeps me going. I really want to be delivering you good content. I am very passionate about what I do, and I want to make sure that I am giving you the education and service that is needed and necessary so that everyone can become more informed. And just because one lender tells you no doesn't mean it's a no. If you've been told no before, make sure you're reaching out to me, because some lenders don't have certain products. Some lenders don't know what they're doing. There's a whole bunch of new loan officers out there that haven't gone through hundreds and hundreds of loans, thousands of loans and scenarios, that might not know loopholes or different ways to get the job done. So if you've ever been told no, make sure you reach out. Let me know. I will take a look at any deal, anytime, no matter what. Even if you're in a deal with someone else and you're not even going to go through us, I will still give you my recommendation. I will review it and make sure that you are in the right product and be your second set of eyes. So thank you for watching me, and I will see you next Wednesday. And by the way, leave any comments on topics that you want to hear about. Anything. Last week I talked about my book club and referenced our Mel Robbins, the 5-second rule from the book club, and how that relates to procrastination and not waiting. I love my book club. I love reading. If that's something that you want to talk about or you want more of that, let me know, because honestly, I feel like sometimes I'm running out of topics and I don't want to bore and I don't want to ramble on like I am right now. And I want to make sure that giving you what you want, what you need, and keeping you guys well informed. So reach out. I will talk to you next week. Thank you.